Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. Some good news. In July 2024, Nigeria's headline inflation rate came out yesterday, showing evidence of peaking as it started inching down to 33.4%, lower than the June rate of 34.19. This was also the first time inflation in Nigeria has eased since December 2022. UK retail sales rebounded in July as better weather led to more spending for department stores. Volume of goods sold in stores and online in the UK rose 0.5% in July after a revised drop of 0.9% in June. Also in the UK, growth continues to be tepid, better than a recession, but not materially so. The GDP, Gross Domestic Product report showed quarterly growth by 0.6% and 0.9% on an annual basis. The pace was somewhat slower than the previous quarter's growth rate, but still demonstrates resilience amid doctor strikes and high borrowing costs. And in the US yesterday, stocks rallied after encouraging earnings and data releases on retail sales and unemployment claims. The risk on sentiment also helped oil prices go up while gold was flat. Positive earnings news came from bellwether Walmart as it announced outperforming its Q2 consensus estimates, also raising its full year outlook. U.S. retail sales, a measure of consumer spending, was up 1% in July, better than the projected increase of 0.3%. And U.S. weekly jobless claims also fell by 7,000 to 227,000, also a 1 month low last week, suggesting the slowdown in the labor market as higher interest rates weigh on the market was manageable. The reports paint a picture of an economy that is still far from a recession. The other side is that economic resilience means lowering expectations of aggressive Federal Reserve interest rate cuts this year. Also in the US, President Biden, in a victory lap for efforts to negotiate lower drug prices, announced deals with pharmaceutical groups to cap prices on 10 of the country's most expensive medicines, saving $7.5 billion. China's July retail sales up 2.7% year-on-year, slightly higher than 2.6% expected and 2.0% in June, while industrial production also rose 5.1% year-on-year in the same period, less than expected and also behind last month's 5.3% print. Also, fixed asset investment for China was up 3.6% year to date. That's year on year in July, as against the expected 3.9% figure. We keep getting these conflicting signals on the China economy. Welcome back. In July 2024, Nigeria's headline inflation rate came down 33.4%, lower than June's 34.19. Inflation is still too high, especially in the northern part of the country. Still, continued naira devaluation last month and lingering supply chain issues were more than compensated by the impact of measures to reduce costs of food imports and fading of the base effect associated with subsidy removal and convergence of exchange rates. Furthermore, on a month-on-month basis, the headline inflation rate in July 2024 was 2.28%, which was 0.03% lower than the rate recorded in June. That was 2.31%. Food inflation also easing. Food inflation rate in July was 39.53% on a year-on-year basis compared to the rate recorded in July. That was 26.98. Food inflation also was at an all-time high of 40.87% in June of 2020. 2024. On a month-on-month basis, the food inflation rate in July was 2.47%. That's a 0.08% decrease compared to the rate recorded in June. But core price inflation grew, which that's inflation excluding agricultural produce and energy, albeit up slightly to 27.5% in July from 27.4% in June. The data confirms the central bank's perspective and Stanbic IPTC S&P July report, which said PMIs were at an 8-month low of 49.2 from 50.1 in June, but also said that headline inflation most likely peaked in June and is expected to moderate in the second half of 2024 as the effects of the PMS subsidy removal and currency depreciation fade, coupled with the start of the primary harvest season, potentially boosting economic activities. Still on the economy, the central bank also has released its July PMI 2024 report showing the composite PMI stood at 49.7 points, indicating contraction in economic activities for the 13th consecutive month. But the index showed improvement compared to the 48.8 points recorded in the previous month. Services PMI showed the sector in expansion territory at 50.3, while industry PMI 48.3 and agriculture PMI 49.7 were both in a shallow contraction. The data also shows that the new orders in July for all sectors were all in decline, somewhat predictive of economic sluggishness. This is the first time inflation is easing in Nigeria, like I said, and it's definitely some relief to frustrated Nigerian citizens burdened by high borrowing costs and tight wallet space. A sustained trend of decline in inflation will support the Monetary Policy Committee's view on normalizing rates as quickly as they possibly can without losing the gains in fighting prices. The next meeting in September 22 to 24 will have the August CPI and PMI reads to inform their decision on monetary parameters. Yesterday, we got the UK economy showing growth to June by 0.6% as we continue to see tepid recovery from last year's recession, also in line with forecasts. This comes after Q1 GDP growth of 0.7%, with growth led by the services sector, in particular IT industry, legal services, and scientific research. According to Liz McKeown, that's the Director of Economic Statistics, the UK economy has grown strongly for 2 quarters, following the weakness that we saw in the second half of last year. The Apex Bank, that's the Bank of England, cut rates to 5% in August, giving Prime Minister Keir Starmer a good start as he aims to take the bricks off Britain's growth, with plans to make it easier to build houses and infrastructure. Chancellor Rachel Reeves also said the scale of the challenge inherited by the incoming Labour government was daunting. Today, we also saw UK retail sales up 0.5% month-on-month in July, also meeting estimates. We also had the monthly core retail sales up 0.7% in July. The annual retail sales in the UK climbed by 1.4% in July versus June's 0.3% fall. So a bit better as far as the consumer appetite is concerned. The better GDP and consumer data will encourage the view that the Bank of England will hold rates unchanged at its meeting in September. Can the Labour government overcome the inertia, and how quickly will cost of borrowing come down in 2024, and how will that transmit to higher growth? But it's still looking up for the UK economy. In Japan, as the yen eased, falling 1.3% against the dollar, fears of massive carry trade unwind that spooked markets last week also eased. It's worth explaining what carry trade means. The carry trade is when an investor borrows against an asset expected to trend lower or offers a lower yield, and uses the proceeds to invest in an asset that is expected to trend higher or offers a higher yield. The borrowed capital is carried from one asset to another. in the latest yen carry trade situation, which led to panic drawdowns in US stocks. Investors had been borrowing the yen at a lower cost and using the proceeds to buy higher returning tech stocks in the US. A falling yen made this profitable and led to demand for tech stocks also going up, and of course investors profited. So when the yen suddenly rallied, and also as the Japanese suddenly unexpectedly raised interest rates, as the Bank of Japan, carry traders rushed to sell their US tech stocks to pay back yen borrowings that had become more expensive and less profitable. Also at a time of nervousness around some of the US data and the outlook for artificial intelligence leading to something like a crash. The Bank of Japan's senior official since then has assured that it was not expecting to raise rates any further in the near future, and that seems to have calmed markets. Stocks in Asia rallied as traders piled back into risk assets on growing expectations of a healthier US economy. Asian markets were upbeat. Japanese equities particularly strengthened as the yen weakened further, boosting income for exporters. Well, that's it from me on Global Business Insights. This is Bode or Shosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments again. Thank you so very much for watching. Bye-bye.